In this video, I'll be teaching you how I do my own back testing. But before I do that, I want to appreciate each and every one of you who have subscribed to this channel. I started this channel this year with 200 subscribers and now I'm over 320 subscribers. Please, if you find this video helpful, do well to subscribe. I'm trying to hit at least 1000 subscribers by the end of this year. So with that said, let's get into the analysis. So I'm going to teach you guys how I do my back testing, but if you've watched my previous video, you will understand that I will first of all do the illustration for you, and then I'll move to the live charts and actually show you the applicable process. So let's start by understanding the simple market movements, how market works. Okay, let's say we have a low here, market give us this pull down, push up, a break of structure, we have this lower high, a break of structure, we have this change of character, market come back to retest it, then we have this break of structure, we have a pullback, market coming back, giving us a break of structure, then the market moving to the downside. Just if you don't understand this illustration, just calm down. I'm going to explain it for you. Okay, so firstly, let me write that this is basic market movements, which means this is how market moves, right? Let's say market structure. Okay, now for the market structure, in order for you to understand it properly, we have the swing high, and we have swing high and swing low, or you can call this the external structure and internal structure. We have the swing low. Okay, now how market moves is that markets move from swing high to swing low. I'm going to explain it to you. Market move from swing high to swing low. Okay, so this is our swing low for the market. This is our swing low. If you are a beginner and you don't understand what swing low means, it's basically a swing low. A swing low is the lowest point the market gets to before an impulsive coming for an impulsive move to the upside. Impulsive move to the upside. Okay, for an impulsive move to the upside. So this is our swing low of the market. We're going to take this out as the swing low. We have our swing low here, swing low. Then we have our swing high. We have our swing high. Our swing high. Now for the swing high is basically just the opposite of swing low. A swing high is the highest point the market gets to before an impulsive move to the downside. Okay, and then we have our, so everything in between the swing low and the swing high is known as the internal structure. Okay, so everything in here is known as the internal structure. Just calm down. I'm going to explain everything and label it for you to understand. Okay, let me just write some of the things out. Every movement between the swing low and swing high is known as the internal structure. This is just basically what worked for me, and this is how I understand the market. So your knowledge may be more advanced than mine, but this is how I understand the market, and this is what I'm doing right now, and this is what is working for me. Okay, so don't come and attack me. Alright, swing high. So we have these market creating lower lows and lower high. So we have our break of structure here because the market is in a downtrend. Like from this side, the market is in a downtrend. We have our break of structure, right? Break of structure, and then we have the lower highs. Have a lower high to the upside, lower high, and then we have our lower low, right? Our lower low. These levels are break of structure, okay? And then if the market refuses to give us another break of structure, which means the market refuses to give us another lower low, and then instead it reverse and pass this recent high, because this is the recent high for the down market, right? This is the recent high for the selling market at this point. So if the market trade past this recent high to the upside, now the market needs to trade past this recent high to the upside with a candle body. So let me write it down here. If if the market refuse, now this is a scenario, this is a sell scenario, right? The market refuse to create another lower low, but instead it's traded past the lower high with, now pay attention to this criteria, with a candle body. This with a candle body, this confirm a change of, hold on, a change of character. This confirm a change of character. Okay, so if the market trade past this lower high to the upside with a candle body, okay, the market has to trade past it with a candle body. Now this confirm a change of character. We now have a change of character. This means that the market has shifted from a downside now to the upside. Okay, so every other move to the upside is going to be a break of structure, which is a BOS. Now I said the market moved from swing high to swing low. Okay, now if this upside, which means this tip, if this tip break trade past this swing high first, which means if this upside movement take out the swing high first, it means that the market, since the market has taken out the swing high, it means that the market is going to find its way to trade down and take out the swing low. Okay, I'm going to explain everything to you, and I'm also going to show you using the live chart. It means that the market will now find its way to the downside to take out the swing low. Okay, so let me write it here. If the market take out the swing low first, then it would then it should take out the swing high. Okay, and then we will now have a change of character. Okay, because this is the lowest point of the market, we will now have a change of character. right? Which means market has changed from sell to the inside, it's changed from buy, taking out this swing high. Now, since it has break the lowest point, we now have another selling market. Now, the reason for this selling market is that the market is coming down to take out the swing low, right? So now we now have a minor change of character. Here we have a minor change of character. Okay, minor change of character. Then this would be, let's say this one is a little bit down. This will now be a major change of character. This will now be a major change of character. And then the second movement to the downside will now be a break of structure. A break of structure. Right? So now the market is coming down to take out this swing low. So if you do understand this market and understand that this is how the market moves, it's really going to help you in your back testing, and it will also make you to at least win more than you lose in the charts. Okay, so at this point the market was buying at this point. Okay, let me change this color for you to understand it. The market was buying at this, just color to red. At this, the market was selling rather. Then at this point the market was buying at this small point. Market was buying, and then the market was selling again at this point to take out the swing low. Okay, so with this I'm going to go over to the live chart to also show you the applicable moves on how the markets move from the swing low to the swing high. So pay very close attention to this, or you can come back and watch this again or play it back for you to understand it. So let's go to the live chart so that I can show you on the live chart. So here on the live chart on BTC USD, we can say that this is our lowest point of the market. The market gets to before the impulsive move to this upside. Okay, so we are going to mark that out as our swing low. We are going to take that as our swing low. Okay. So we have our swing low, swing low, right? And then this is our highest point before we have this point, right? So these are our highest points. We mark it out as swing, mark this one out as swing high, swing high. Now you can see that from the movement in the 4-hour time frame, the market, since the market took out the swing low first, the market went straight to take out the swing high. Okay, now since you already have this in mind from the 4-hour time frame, you have marked out your swing low and your swing high. You have marked out which one the market took out first. Now your aim in the lower time frame will be that you are going to trade the market in the direction to take out the opposite side, which means if the market take out the swing low first, in the lower time frame you will be trying to look for buy opportunity in order for the market to take out the swing high. Okay, so from the here we'll move over to the lower time frame. Okay, bear in mind we already have our levels from the 4-hour time frame, so we can go down to the 15-minute time frame. But if I go down to the 15 minutes time frame, my trading view is not a paid version, so the candlestick will be too much. So I'll go down to the 30 minutes time frame. Now in the 30 minutes time frame is where you actually have you start to analyze the market, like your break of structure, your change of character. I already made a video on that, but I'm just going to have like a quick recap on it from here so that you understand it. Now we have our lowest point here, but first this is a minor. Here we have our minor change of character because the market was buying up to this point, and then from here the market changed character. right? So we have our minor change of character. So that here our minor change of character. And because it said backtest means that you go back to previous chart to actually see how the market moves in order for you to predict the future movements, right? So we have our, now I'm not analyzing the market, I'm just showing you how I do my backtest. We have our major change of character. Let me use that here. Our major change of character. And if you watch my video on structural liquidity, we have our order block here, right? We have our order block, and then the market sold, which means we have our break of structure here again. We have our break of structure, excuse me. We have our break of structure. So the market continue like that, giving us a break of structure to the downside. Break of structure, market gave us this break of structure again. We have this pullback, right? Then, but before the pullback, we have this other block here. Before the change of character, we had this other block. Remember I said from my video, you mark the other block from the very tip. We have this other block. We have this inducements. So if you are to take your entry from here, this is purely a structural liquidity entry. We have our inducement here. I already made a video on that, on structural liquidity. If you have not watched it, you can go and watch that video. We have our break of structure. The market's coming down to take out the break of structure before going to take the inducement and then tapping into the other block before the positive move. That is on structural liquidity. So you can go and watch that video. We have your entry from here. But my main aim for this video is to tell you that the best way to actually backtest is to mark out your swing high or your swing low or your external or internal liquidity, whatever name you want to call it. But I call it swing high and swing low. Then from there you go to the lower time frame and actually break down the market movements. Okay. Then from there the market change character. We add a change of character here. We add a change of character to the upside here. Right. Market came down again, broke structure. But as soon as the market took out this swing low, market find its way to the upside to take out the swing high. All right. So your main focus when you are back testing is to go to the higher time frame, like the 4-hour time frame or any time frame you want. Look at where the market is currently at and look at where it's coming from. Okay. If you have an idea of where the market is coming from, it will be very, very easy for you to predict where the market is going. Okay. So your job is just to go down to the lower time frame and begin to analyze the market. Okay. So before you even backtest, you must at least have some level of market analysis and other stuff like that. Okay. Now let me show you a backtest I did on the 4-hour time frame on BTC USD. I think I did this back testing yesterday, something like that. Now from the 4-hour time frame, this is purely a structure liquidity. Okay, from the 4-hour time frame, we had a break of structure at this level, market broke structure. All right, okay. Market broke structure here, came down. So our expectation was that since the market came to tap into this one, let me do it well. Since the market tap this one, right? So this is the next available order block in the 4-hour time frame. This one here is the next available order block in the 4-hour time frame. Okay. And then since the market mitigated this order block, this fair value gap, and is coming up again. Okay, the market is trading up again, and I've marked out this order block from the 4-hour time frame. All I did was to go down to the 15 minutes time frame and actually break it down. Okay, So this area is my order block from the 4-hour time frame. But I cannot just mark the 4-hour block in the 4-hour time frame, because then in the lower time frame it will be too big, right? So I need to break it down to the lower time frame and mark it. So we have our change of character, signifying that the market has changed character to the downside, right? Then we have this highest point. Market came, mitigated this order block. You can also see that this is purely on structural liquidity entry. Mitigated this order block. We had a little break of structure here to the downside, right? Then we have this inducement. Okay, and our expectation according to the structural liquidity strategy, if you have watched that video, is that the market should give us a break of structure, come back to take out this inducement, and then tap into our available order block before the impulsive move to the downside. And also, if you watch my video on types of liquidity and how to take profits, this is a trend line liquidity. I talked about it on types of liquidity. So my expectation and my take profit would be that the market should come and clear out this trend line liquidity. That was the reason why I put my take profits in this order block. Let me go to the before of the trade. So here's the before for the trade. See, we have this trend line liquidity. We have the inducement, we have our break of structure, we have our order block, we have our break of structure. Okay, so you see that once you already know what you are looking for in the market, you just come to the market every single day to look for it, right? So this is the same trade. I have this trade currently running now. Okay, this is the same trade on BTC. It's purely the same strategy. We have our order block, right? We have our inducement, but then this one is on engineer liquidity, because the market did not come and take out this break of structure, which means the market did not give us this something like this. The market did not break structure before going to our point of interest. Okay, so please, if you find this video helpful, do it to like and subscribe, and I'll see you guys in my next video.